Hey guys, my name's Ravi Sharma and I am the founder and buyer's agent here at Search Property. Thank you so much for joining me on yet another episode of Search Property TV. If you haven't already, then do please subscribe down below and press the bell icon. Guys, today's video is about where the best places to invest in real estate in Australia in 2020. Right now, a lot of people are scared. Scared because there's a recession and there's a pandemic and there's the September cliff. Now it's the March cliff. And there's always some sort of noise, something happening. And so I'm here to sort of try through this channel to educate people to make better educated decisions when it comes to real estate investing. Now, obviously at the end of this video, I'm going to share with you my #1 hotspot. Now, people that have been following me on this channel for a while know that I don't like the name hotspot or the word hotspot when it comes to these things. However, there is no other way to describe what I am seeing fundamentally in this area, and I really want you to get ahead of it. Now, obviously, there's certain suburbs, there are certain streets, and there are certain assets in these locations that make it a better investment than just simply knowing a suburb or location. Something I want to just press down on is people are getting too caught up with the suburb versus knowing the asset selection is sometimes more important than the location itself. Too many people are getting caught out trying to buy these small studio apartments, right? Or 1-bedroom apartments in really expensive suburbs, expecting that the 11% growth on median price in that area is going to be reflected in their shitbox unit. It doesn't work like that. And that's why you will have this median price as an indicator, right? But you need to have so much more information around why exactly there are growth fundamentals in that area for that area to grow. And then looking at asset selection. What do the people in that area actually want? What is it so unique about your property that will mean your property is in higher demand, which eventually will pull values up and prices up as well? So without getting too caught into the nitty gritty, I want to go through each major location in Australia that you would possibly start looking at when you're researching. And of course, if you need the help, you have a buyer's agency. You are listening to someone who has personally built a property portfolio of 4.5 million over 6 years, but I've also started helping clients, and this is why I've created Search Property. Search Property TV is a byproduct of that. So if you do want to go and lock yourself in with a strategy consultation, absolutely free. There's a link in the description, and you can also visit my website so you can check out all the good stuff as well as booking in a consultation there. All right, guys, let's get into it. Now, a lot of my viewers are from Sydney, and that's because I'm from Sydney. So friends, family have just sort of started watching my stuff, and that's how it's been spreading. So let's address the elephant in the room. Sydney, is it a good investment in 2020? Now, again, there's a variety of factors. Some suburbs are going up, some suburbs are going down, but then within those suburbs, some streets are performing well, some streets are not performing well. It's very hard to give a very specific sort of indication of what's happening in these areas. However, if we're going to look at a broader sort of scheme of things, where you start looking at your research, we look at Sydney. And I can tell you now, I will not be looking at Sydney in 2020. Why? Well, a big factor for me as an investor is cash flow. And now vacancy rates are at all-time highs in Sydney across from the city into western suburbs, somewhere that a lot of investors have been sort of looking at going, oh, I want to get advantage of the first-time buyers grants. I'm looking at apartments in Parramatta. Well, you've got a 6% vacancy rate there. If you do not understand what vacancy rates are and how important this is for an investor, then you really need to book yourself in with a strategy consultation, start looking at the videos on this channel, because you are going to get into strife. And simply looking at going, well, Sydney's prices were at all-time highs at 2017 and 18. So these properties are on the cheap, they're down. Oh my God, I can buy them for 20% off. It doesn't really work like that, guys. And this is where you need to understand, what are investors' motivations? Why are people moving into the area, or why are they moving out of the area? And there's so much more research, but we're keeping it generic, we're keeping it very high level. So, am I investing in Sydney in 2020? No. Am I looking at Brisbane? Now, Brisbane is interesting. For the longest time, since I started investing, and even before I started investing, people have always said one thing. They've gone, Brisbane is tipped to grow. It's about to have a boom because mathematically, when you look at how much overpriced Sydney and Melbourne are, Brisbane has to catch up, right? And they're putting all this infrastructure in and they're like, oh, people are gonna move here. Now, in some suburbs, it has been true, right? Don't get me wrong. There are some suburbs, there are some pockets within those suburbs that have done well. But for the majority of it, it's been a dud. It's been a dud, it's been a fake tale, and a lot of property spruikers went out to Brisbane and they went, okay, Brisbane, walked 30 kilometers that way and said, hey, there's land here, or, we can build homes. People got caught into this. And, it's sad because I've got a few close friends that actually, went into that because someone said they should, or media has been on about it for like 6-7 years saying Brisbane's about to boom. So theoretically, if you could be 20 kilometers away from the city and in a brand new house, well, that should do well, right? They got caught in the fact that there was an oversupply of properties out there. Developers were taking major commissions, and it was based on the rumor that it would happen. I haven't seen it, and to be honest, for me personally, I'm very picky with where I'm looking at in Brisbane specifically. There's an oversupply of apartments in the inner city circle, inner ring, and there's also house and land packages that are absolute garbage that I wouldn't touch. So when you're looking at Brisbane, do your own research and due diligence. Me as a property investor or as a buyer's agent, I personally am not looking at Brisbane right now in 2020. However, my eyes are on a couple of suburbs that could present pretty good value coming soon, maybe in 2021, 2022. And there's obviously reasons for that, but that's for clients that I actually talk to that are paid for the services. So Brisbane in 2020, no deal. Okay. Well, let's move across to this side because I think everyone's going to know I'm going to talk about regional properties at some point. I love them because they're giving me capital growth and they're giving me cash flow. Guys, these are unicorn properties, whatever you want to call them, fairy tale, when you can get positive cash flow where I'm not putting any money from my pocket, but they're still growing. People still do not believe me that, a suburb that I've never heard of is growing better than Sydney and Melbourne. And wait, I don't have to put in my money and there's no negative gearing. What's positive gearing? People don't understand this, and if they don't open their minds up to becoming a bit more proactive about learning different things and that there are other ways to get to point B, you'll be left behind. That's simply the truth. I've seen some people, the smartest people I've been growing up with, that are sitting back and going, no, I've got about $200,000 in the bank, but I'm not going to invest because I might lose my job. The truth is, there are ways you can mitigate that risk. And if you're not open to understanding that, well, then you're going to get left behind. And I've seen firsthand in the last 6 months, people that have been earning, minimum wage, that have been saving for a few years, have gotten into a property and now are looking at going, how do I extract the equity to buy my third and fourth properties? This is happening. People are too busy trying to look on, Channel 9 and say, oh, well, the property market's crashing, I'm gonna just wait. And, they're waiting for September because 30% drop, didn't happen. Now they're waiting till March because they think it's gonna happen then. Did you not learn the first time? Did you not learn the fact is the government cannot afford to have the property fall? It just doesn't work like that. And when you're looking at the fundamentals in the back, I'm just licking my lips going, you know what? The longer people wait for this cliff means that I can go in and buy more properties for myself and for my clients. And in a year's time, in 12 to 24 months, when we're gonna see the biggest property boom ever, that's when people are gonna FOMO out, and that's really gonna push up prices, but also mean that people can't build these big property portfolios because cash flows will decrease, rental yields will suppress, and that's what's gonna happen. So when we get to regional properties, I'm a big advocate, not of everywhere. There are a few pockets, again, very specific areas we're looking at. Now, if we use the example of Sydney, I'm buying a Parramatta unit, great, whoop-de-doo. You're spending $600,000 for that. You've got a rental vacancy of 6%, okay? Let's just get that into context. 3% is a balanced market, 6% is garbage. That's where your tenant's gonna leave after the 6 months, and if they're not leaving, they're asking for a rent reduction. You're already paying $10,000, $15,000 out of your pocket to hold this unit that you think is gonna go up in value. It's a very unsophisticated way of investing. Whereas if you're looking at regional properties, you're looking at $200,000, $300,000, which is affordable. and they're providing 7 or 8% rental yields and growing at 4, 5, 6% annually. Tell me where I've got it wrong here, guys. So regionally, yes, I am big. I am telling a lot of clients that there are some areas that I'm really focusing on and there are some good deals. However, when we're looking at regionally and people thinking no one's buying, I had a property that I lost for a client because we got outbid. It wasn't even at an auction. We simply put in an offer and we put in another offer and then we reached our limit for what we wanted to pay. Now, people are getting emotional, but a property that we were looking at for a client, it went online on Thursday. Friday, we had offers in. On Saturday, they had an open house with 32 buyer groups, okay? 32. That means that one purchased it, meaning 31 others are still on the hunt looking for a property. Why would they be doing that in a recession? Why would they be doing that in a pandemic? Guys, 99% of people will go one way. If you can be the 1% and actually go and target these areas, be proactive and take advantage, I promise you, you will come better for it, either with learnings or with actual physical money and like growth in these properties. So regionally, 150%, I am looking there definitely. Now we move to Melbourne. Melbourne's interesting. Melbourne obviously announced stage 4 lockdowns. Very sad to hear. Anyone that's from Victoria that's watching this video, my heart goes out to you. I feel really bad, but unfortunately that's where we're at. We need to take this a bit more seriously. Whether you believe COVID is a lie or it's a conspiracy or it's real, at the end of the day, it still exists and it's affecting businesses. I know a lot of people that are really struggling at the moment. And so Melbourne's a very interesting one. When we're looking at, outer regional Victoria, there are some good fundamentals. Melbourne though, it had already an oversupply of units in that area, very similar to Brisbane. However, there were suburbs that were doing really well, had good fundamentals. I personally would not be investing in the Melbourne area in 2020. Now, Perth is interesting because we have seen signs of recovery. Before the pandemic hit, we were seeing some very good growth factors in the area. The demands for our products from overseas is really grown in demand, especially with the coal and things like that. It is a very interesting market because they've been burnt for so long. We haven't seen the prices recover from what they were, 5, 6, even 10 years ago. We still haven't seen that come back, but we have seen a few levels of stability, some growth occurring in some areas, and we are looking there. Not right now actively targeting a specific suburb, but there are a couple of suburbs we've kept our eye on. Very interesting stuff happening. And obviously if the pandemic wasn't happening, I could assure you that we would be buying there right now. But I think things have moved around a little bit. So we're just pivoting as well with our research team to understand when's the best time to enter this market. Because cash flow, it exists, as well as that capital growth that can be expected with what's happening out there. So Perth, in 2020, it's a no deal. However, in 2021, I can guarantee you we will be buying there. We moved to Tasmania. Tasmania's done really well, and something that most people don't know about because I wasn't actively on Search Property here, was I tipped that Hobart, Launceston would do really well. And when I say really well, I didn't expect it to be the #1 performing capital city, but I did expect it to be at very similar levels to Sydney and Melbourne. At the time, obviously the people around me had benefited from purchasing it in the area, but Hobart's done really well. I've seen prices go, pretty much 40 to 50, 60% over the space of 2-3 years. That was a proper boom. And with that went the rents that were required, and places that were renting for say $400 a week, literally after 6 months were $100 higher, because they have a real issue with rental supply there. I do think that inner Hobart and inner Launceston, there's some overpriced sort of properties there, and I think I wouldn't be touching those. However, if we're looking a few suburbs out, if we're looking at even an hour out from these towns here, or these capital cities, there is some real good opportunity. And something that I bought for a client earlier this year, we bought for about $237,000. It's worth about $280,000 in the space of 6 months. Now, yes, we bought under market value, but we didn't buy it that much under market value that it has, that was the price originally. It was a perfectly good sale. There's no distress there, but we did identify a certain area and we're looking at that pocket very closely. I think there has been a bit more demand in the area because again, you're getting best of both worlds, getting cash flow and capital growth, and it's holding very stable. I think they've done really well with COVID. So good opportunities there. 2020, I will definitely be looking in Tasmania. Now comes Adelaide, the sleeping giant. Some people will not look at it going, well, it's not even a capital city, it's a regional town. And it's funny people mention it that way because if you look at their regional visa system that they have in place, what their migration policy looks like for Australia, it's very interesting. And it's without a doubt my number one hotspot for investing in 2020. Now, why? Well, you're still able to find really good value here. Now, the similar things that they've been talking about Brisbane, now those same, there's some investors that have gone, no, Brisbane really hasn't done what I thought it would. But wait, there's something else down there, being Adelaide, and they're doing something, and now they're picking into it. It's very early stages of this rising market that we're seeing in Adelaide, but you can pretty much get some really good deals. I'm looking at a specific area that I'm very keen on. People will often not touch this area. However, I do have indications of why this area will be growing quite significantly. And it's not your Surrey Hills of Sydney equivalent. It's definitely not. It's probably your Mount Druitts and your Villa Woods of what Greater Sydney looked like about 10 years ago. I personally am investing in the area. I am looking very closely at what's happening, and I'm very excited because you've got an area that's expecting their population to rise by 33% in the next 15 years. And the prices you can get at these properties are $180,000, $200,000, where the capital growth expected is about 4 or 5%, and the rental yields are 8%, 9%. This is a banger. That's why I had to go with the name of a hotspot. It's my number one hotspot. That doesn't mean I'm not looking at any of these other areas. I am keeping an eye on specific suburbs. I have a watch list. The research team has a watch list, and we are actively looking at something that pops up. Because when you're looking at these markets, we would rather specialize in specific areas than to go, we can service all of Australia at the moment. In 2020, I can tell you if you're looking at Brisbane, Melbourne, or Perth and you're asking for our help, probably not going to help you out or can't help you out to that level. However, there are pockets in Sydney, obviously because we're here, majority of our team's from here. We do have a very good understanding, but here is where I think we're really going to see the people that want to take their property portfolios from 0 to 4 or 5 and still be able to do it in today's financial climate, they can. However, if you're going, I want to buy one in Sydney and get the business, the grant, the first home buyers grants, I think you're going to struggle. And I think the real struggle is going to come in 2-3 years time when cash flow doesn't exist for you. So if you have enjoyed this video, then please give it a thumbs up. And if you want to chat further into, what my thoughts are, or if you want to get some intel of, why I think Adelaide's the number one hotspot at the moment, then definitely do DM me on Instagram, search Property AU. Or if you want to have an in-depth conversation and actually do something about it and be proactive and be a sophisticated investor and get in before people are FOMOing in, then there's a link in the description below to my website where you can book in a strategy session with me, and we'll go through what your goals are and find assets that are actually going to be helping you create wealth long-term in line with your goals, okay? So again, thank you so much for joining me on this episode. I really do appreciate it. I'll catch you guys in the next video. Thanks, guys.